Ladies and gentlemen, like we had some fantastic and pertinent discussions since morning, starting with how, what are the challenges and opportunities of what women are facing in finance, to actually talking about and introducing ourselves to the dew point markets, and then, of course, to this fantastic conversation about AI and blockchain. It is now time we switch gears to another fantastic and the first panel discussion coming your way on how we can, the topic titled here, right, is Demystifying the Offshore Market, Accessing Global Liquidity for Indian Businesses. Well, I'm sure it's a powerful panel and our power speakers are joining right here on stage. First up, joining us on stage, a speaker who would be sharing their insights on Demystifying the Offshore Market, Accessing Global Liquidity for Indian Businesses. Joining us on stage, we have with us a seasoned equity trader who began his career in New York City and has navigated multiple market cycles. With experience at top firms, he leads TradeView's equity division and mentors new traders through the Platinum Development Program. We have with us the head of Global Equities TradeView Markets, Michael Lombardo. Well, can we please put our hands together for all our speakers joining on stage? Come on, it's time to bring in their energy, because it is your energy and your applause that really keeps our speakers going. Next up joining we have is Head of Operations at Spectra Global, a leading CFD brokerage. He oversees seamless and compliant operations. Holds a bachelor's degree in finance and economics from Michigan State University and is passionate about finance, innovation and making a difference, and dedicated to delivering cutting-edge services. Operations Manager at Spectra Global Limited, Kashish Jain. Warm welcome, Kashish. Next up joining is a seasoned investment expert with over a decade of experience in MENA finance, with an MBA engineering and PMP degrees, has fintech tech expertise and shines, holds MVP and MCTS diplomas. Joining us on stage is Dahir Mohammad, Business Development Director at GTC Group. Warm welcome, Dahir. And to spearhead this conversation is a seasoned financial markets veteran with over 20 plus years of experience. He specializes in business strategies, high net worth client services and global market analysis. A sought after speaker and webinar host, he offers deep insights into regulations, market and risk management. We have with us Sai Mahesh, Regional Manager, ICM.com. Warm welcome, Sai. And now that we have your attention, an attentive round of applause. Come on, everyone. And yes, over to our moderator to take this forward. Thank you.
All right. Thank you. Assessing global liquidity to the offshore markets. This is Sai from ICM as the moderator today. We have amazing speakers today on the stage today. So I don't know the way to introduce them one by one from my side. Mr. Michael, Head of Global Equities from TradeView Markets. Kashish Jain, Operational Manager from Spectra Global Limited. And Mr. Dahir Mohammad, Business Development Director from GTC Group. All right. So since we are discussing about the global liquidities, global financial markets, I want to begin with basically global financial markets, one of the biggest and one of the high volatility markets, you can speak. So the main drive is there in the global financial market, which is the global liquidity. So the global liquidity refers to a volume of financial flows, which also largely intermediated with global banks, non-bank financials, which also we can refers to be as a high frequency across the borders. Here is my question. What do you consider the most significant and opportunities and the challenges you face on global liquidity on the offshore markets? For Michael, please.
Thank you, Sai, and thank you everyone for joining the panel. It's my pleasure to come here. Traveled 20 hours from New York to be a part of this wonderful event, so thank you for inviting me and thank you for the Money Expo. It's a great question. How can businesses take advantage of the global financial markets? let's just simply break it up. Let's break it up into two aspects, two perspectives. You have big businesses and then small business. A big business, obviously, when we're talking about accessing foreign global markets, the ability for a big business or a conglomerate to get their shares listed on a foreign exchange provides massive opportunities, access to new liquidity, access to new capital, a new customer base. Of course, there's challenges with regard to regulatory scrutiny, financial reporting, et cetera, but the positives, the benefits far outweigh the negatives, right? So that's a big business. I think everyone here kind of falls into the category of small business or retail investors. A huge opportunity for smaller investors, retail investors, to access the foreign equity markets is the ability to diversify cash holdings. So if you're a small retail investor, if you have funds sitting in a bank account earning a little bit of interest, you can consider it's very easy to grow that capital in a safe and secure way. In the United States, in the US equity markets, we have ETFs, exchange traded funds. ETFs are securities, US listed securities, that derive their value from an underlying asset or an index, as opposed to a stock where it gets its value from earnings and its valuations. But in ETF, there are countless ETFs in the US. So what can you do here as an Indian business, Indian investor? We've all heard of crypto. We just had a presentation about crypto. We all know the challenges associated with crypto, the scrutiny associated with crypto, wallets getting hacked, the exchanges going out of business, et cetera, et cetera. So what can you do? You have the ability to trade a Bitcoin ETF in the United States. And if you invest in, I'll give you one for example, BTCO is a US listed Bitcoin ETF. You avoid all of that scrutiny, you avoid those risks, but most importantly, the taxation here in cryptos, it's excessive. So you have the ability to access a foreign market. You can diversify your cash holdings, all without the scrutiny and all the negative effects of investing in crypto. So that's
fantastic.
One of the two important
the exchange traded fund is one of the greatest platform for the global liquidity as well. Like
there's countless ETFs, and I'll discuss about it again. But there's countless ETFs that really give investors, not only in India but all across the world, the ability to diversify their holdings.
Fantastic, amazing. I go with the same question with Dahir, please.
Hello everyone, it's good to see you again, and thank you Sai, and thank you my friend, thank you Stephen and Kashish. It's good. Just we need to, actually this is a hard subject, and it is very has too many branches, but let's focus first about what is the role of regulatory. It's okay, actually any financial broker has to be connected to a regulatory. Let's say we have NFA for US, National Future Association. You have, let's say, for UK based client and Europe, you have FCA, CISEC, you have ASIC, you have that. What is the rule for all of these? All these regulatory have a main rule to make sure that all the brokers are following all the process, policies and procedure. Why? They need to take care of what is the security of fund, how secure they can secure the client in terms of any volatility of the market. Is the broker that he gonna invest his money and his asset, is it a top worthy broker in term? I want to make sure that there is the security fund. KYC, AML, this is one of the biggest stop, because for instance, according to each country, every broker has his own policies in onboarding the clients. Some broker will ask you that you will need a valid documentation, we need a valid proof of fund, a valid proof of address and source of wealth. So, according to any regulator, that's why all financial brokers seeks to have a multi-regulation. You can find that every broker will have at least 3 to 4 regulation. This to help their client at the best in this, and you need to keep that there is segregated accounts. So all the fund and investment from the client side will be away from the broker's account. One more thing they need. Sometimes regulatory are giving hard time to brokers. You need to understand it's not an easy. When someone will tell you this like broker is regulated from FCA, they will put some restrictions sometimes in leverage. It's not an easy. Client demand is here. Let's say one of the RM from any broker will give you a call. It's okay, we are a multi-asset broker, we are a multi-regulated broker. You will tell them it's okay, I want to trade in like major currencies or commodities, but I want a high leverage. You can tell him it's okay. Mostly, I think that he will accept me in this. Mostly in US and UK, max leverage is 1 to 40, 1 to 30. Sometimes max 50. Okay, this is because of like FCA for UK prosecution. In other countries, sometimes the client will tell you, no, I want to trade in a higher leverage. It's 1 to like 400, 1 to 100, 300, up to 500. This goes to another regulatory. So it's not an easy part. So basically when we regulatory, they are put restriction for leverage, security of fund, AML, onboarding, all of that. So it's not an easy part to know why. So I think all need to know what is the main part of regulation. When someone will prospect you in a call or in a meeting, will tell you we are multi-regulated, you should understand this. It's for your own benefit. Once you have that, so you know that the broker, whatever the financial broker, once he will reach you, there is too many phases he needs to do it to be a trustworthy broker from regulation side.
Fantastic. Well said, because if you say about coming to the leverage part, like 1:30, 1:40, or 1:50 from different exchanges and the regulation part, it's well good that it's protecting the client's funds, and basically it helps the clients also to be on a safer side, because the higher the leverage, higher the risk on their positions,
And
right?
AML and KYC.
Of course, of course. Since you started about the regulation, I'd like to put you some questions to Kashish. Yep. So basically, how Indian business can able to assert or manage or challenges in coming to the regulation side of the view of the offshore markets?
So firstly, hello everyone. Thanks, Sai, for this question. So in the globalized financial landscape, Indian businesses seeking offshore liquidity must navigate through a complex web of regulatory and compliance requirements. So it is very crucial to understand these requirements and implement strategies so that you're adhering to them. So I'll say, like, often different countries out there have their own jurisdictions, each have their own regulations. So you need to properly understand what they are. Different countries have their own systems of, let's say, tax reporting, different AML procedures, data protection. So Indian businesses need to accordingly adopt strategies that are in standard with these requirements. So a couple of strategies that I can suggest is engaging with local partners, local firms that can provide their valuable insights, engaging with their advisors who can guide you in a better way on how to deal with these requirements. Then the next one would be to establish a comprehensive compliance framework that would have in detail the AML procedures, the KYC checks that need to be done in order to comply with those jurisdictions. Then you can use technology, you can use softwares and tools that automate this whole process and also comply with those requirements. You can conduct regular audits so that you're in line with the evolving changes that happen in the industry. So another important thing would be training for the employees. if the employees of the business firms, they stay well informed about what's happening in the industry, then they can certainly comply with those requirements.
Fantastic, fantastic. I want to put the same thing to Dahir because you're the right person more enough to give about the regulation. Could you please?
Okay. So basically here when we speak, what I can see in the last since today and yesterday, that there is a lot of potential in the Indian markets, and this has been so long. India is in the third rank of the global economic power, so no one can this. But the thing is that what I can see in the last 2 days, there is a demand has been happening in the market. You can see too many clients, too many guests that came here. They're interested. They ask so many questions regarding how to do. So we need to educate them in a way, in a good way. You need to understand. We spoke yesterday, I think you also, we spoke in the same topic about how to choose your broker, how to know if the broker is worthy, trustworthy for you or not. And financial market is not only about commodity. There is too many emerging markets that you need to take into consideration, like equity sharing. There is too many aspects. I have prepared the small notes that it's okay. For an example, for the equity shares, you have Tata Consultancy Service, right? TCS. And Reliance Industries Limited, RIR, are appointed Indian companies with public trades equity. So it's not only about trading commodities, major currencies. There is equity shares you can invest. You have very high potential even in the local markets. You can combine even global markets with the local markets. Just you need everyone, I'm asking each and every one of you, it's okay, consider this. The topic is how to generate a passive income. You need to understand how this market works. Another example that I want to give, there is preference shares also. It's okay, you can check about HDFC Bank. It issued some preference shares to investor who seeks a stable income. And there is also mutual fund. Here a lot of bank is giving some opportunities in mutual fund. All of this you need to take in consideration, that this is how global market works, because all these markets connecting to the global economy. You have to understand it's very stable as long as you know how to handle your risk. So you as an investor, you need to understand all of these. You need to do your own due diligence. You need to understand, read about this market carefully, know how to choose your broker, know all the aspect and approaches how to start. If not, please, I'm asking each and every one, once you do all this, start search for educational level. Educate yourself about this level. Start understand what is the difference between equity shares, between mutual fund, between prospecting global market. The sky has no limit in this global market. So you need to understand.
Fantastic. Thank you. Since we are talking about the regulation, so parallelly, there will be a risk management, of course. So I want to discuss with Michael how the offshore markets comes to various risks and how this can be overtaken with the key points, or what are the suggestions from your side to overcome this?
So there's multiple risks. Look, anybody who tells you that investing is riskless, walk away. Move in the other direction,
Exactly.
right?
Yeah.
That's the last person you ever want to speak to when it comes to investing. So what are some risks that you need to consider when you're talking about global equity markets, global option markets? One, consider geopolitical risk. Take into consideration the country that you're actually considering and sending your funds to. It's not worth sending money into a country that has political instability, authoritative regimes. Avoid those. Obviously, it doesn't make sense to do that. Number two, and again, Dahir spoke to this a little bit, counterparty risk. What broker, who are you sending your money to? Where are they registered? You say many of the good brokers are they're multi-jurisdictional. Do they have any marks on their license? Do your due diligence as a retail investor, as a small business. Do your research to find out if there's any issues with this broker. Everything should be detailed. And so when you make an investment, ROI is very important, right? Everyone's concerned about how much money am I going to get back. What's more important, though, is the return of your capital. And investing in a broker that has some scrutiny or is unscrupulous can quickly turn a good investment into a real bad one. So I would urge you, counterparty risk is very important for small and retail investors. Make sure you are working with good, reputable brokers in jurisdictions that make sense. And so whether it's options or whether it's equities, be sure of who you are sending your money to.
Fantastic. Great, thanks. I want to put the same, I think you was the right person with Akashish to give some discussion on that.
So being an operations manager, obviously, there are significant challenges when it comes to operational risks. But I'd like to answer this question in a different way from the Indian business's point of view. Right? So there are various challenges that can affect not only the day-to-day operations, but also the long-term goals for Indian businesses who want to participate in offshore markets. So some of the operational risks, like I can identify them as, the first is the regulatory and compliance risk, which I talked about in my last question. You need to be aware of what kind of jurisdiction it is, what will be the compliance requirements for that. The next one would be, participating in offshore markets can result in cybersecurity threats. So you need to have a complete data protection. That is very important. Natural disasters can happen because of, geological or I'll say logistical factors. So you need to be aware of that. And there can be differences in language or cultural barriers that Indian businesses can face when they operate in, outside markets. So some of the strategies that they can adopt to mitigate these risks can be, developing a complete risk management plan, including all the compliance requirements, including all the strategies that can mitigate the risks. You need to implement a robust cybersecurity system so that you're completely safe from hackers, from phishing attacks. There has to be a complete continuity business plan so that your day-to-day operations, your long-term goals are met and you keep operating in the same manner. And the last one would be to educate your employees about the cultural norms, what happens in those markets, in those countries, so they have a sense of belongingness and they can adjust well and comply with the requirements. Thank you.
Amazing, thank you. As we discussed about the regulations, we discussed about the risk management. Let's move on to strategy, how to start the business, and what are the financial instruments to be used to develop an Indian business for this offshore markets. I'm on with Michael, please. With
Sorry?
Michael, yeah. Instruments, financial instruments to start with.
So, great question. So you finally figured out a way how to invest, and you're able to. You've opened up a foreign entity, and now you're looking for opportunities. So, one opportunity again, and I'll focus on the U.S. Investing in futures. The ability to, if you're a small business or if you're a big business, and you have large variable commodity costs, you could offset years worth of commodity costs by having an effective future strategy, whether it's crude, steel, etc. So finding a good futures broker that offers the ability to trade the CME, ICE, etc., is a very important financial instrument. Number two, I'll go back to focusing on ETFs. Here in India, I believe you have the Nifty 50, right? The top 50 Indian companies. The correlation to the U.S. Would be the S&P 500. So again, you have the ability to trade, rather than picking one individual stock, you can invest in the entire U.S. simply by buying a symbol, an ETF called SPY, SPY. the two other big ones that sort of correlate to the Nifty 50 would be the QQQ, which is the NASDAQ, all right? So you get the top 100 NASDAQ technology stocks, and then the other one would be the DIAs, which we commonly refer to as the diamonds, where you get to invest in the Dow Jones. The S&P 500, you get the 500 largest U.S. companies. And so that's a real easy way for foreign investors to access the U.S. markets. I'm not going to say it's riskless, right? So obviously there's risk, markets can go down, but however, over the long term, returns have proven that investing and having a long-term strategy can generate a great deal of growth. So ETFs in major ETFs and futures are two financial instruments that I would strongly recommend.
And I want to have something like how this US markets where S&Ps, NASDAQs or Dow Jones, how it's going to help, or ETF with that, going to help the Indian clients who've been trading or Indian investors for the stock markets who have been in locally regulated?
Yeah, so you're diversifying, right? So again, many Indian residents, Indian citizens they're comfortable investing in the Indian market. The returns may be limited here. So you have the ability to, I'm going to say, access one of the most liquid, one of the most robust equity markets in the world in the US. Same thing goes with the UK and Japan. But again, the ability to diversify your portfolio and to create a balanced portfolio mitigates risk of just investing, of just putting, there's a saying, putting all your eggs in one basket. When you move into other markets, when you buy equities and bonds and you create a balanced portfolio, when you see events over the last 2 weeks where you saw a major dip in the US market, if you have a hedge and you're invested in bonds, and your equities might go down, but your bond portfolio is going to go up. And so having an effective diversified portfolio across multiple foreign markets, it just mitigates a lot of risk and can give you a much higher rate of return on your investments.
Fantastic, thank you. And I want to put the same with you. So what kind of instruments, financial instrument can be used to build the Indian business for the offshores? Major financial instruments from your side, please.
Okay, let me ask you, and this might be like that. You know that the Indian government have some saving in bonds and in gold. Still, this. Now, there is something called diversity. Government of India already have some kind of instrument trading in that. It's away from that. So it's given like fixed deposit in that, fixed profit that you can entertain. Okay, another thing regarding ETFs. You know that Nifty 50 had ETFs. Indian government have gold ETFs, and it's giving amazing revenues. So because most of people like just to know, not in depth about the information about this. So they think that it's only one or two instruments, while there is so many instruments you can trade regarding the Indian government. And also, you have even in Nifty, you have Nifty options, Nifty futures. You have gold future and gold option that's already provided by the Indian government. So if you checked, India is very rich in terms of too many instruments that it's locally you can trade in, you can invest in, and it's following all the policies and the procedure and the aspect approaches that can happen in the global markets.
Fantastic. You're right, because when you say about like offshore companies or offshore markets, one of the major tool which is going to give a lot of liquidity for ETF markets. And this is one of the major factors also which is going to be help for Indian business to develop their long-term business basically.
Sorry to cut you short. When I checked yesterday, I was astonished about the revenues about Nifty 50 futures and Nifty 50 options also. Now it's become, there is Nifty 50, Nifty 500, Nifty like 200 also. And there is too many cooperation has been done in the Indian government. I was astonished. I said, just wow, we have all of these guys you should invest and dig more. What all opportunities that you have in the local markets.
No doubt at all. The witness is there for the statistics says that there's a lot of
amazing. Yes.
there's no doubt at all. So when you're talking about this instrument, definitely we have to talk about the strategy or a partnership or where we go for a strategic partner to develop our business. So I will go with to you with again to discuss on this. So what kind of a strategic partnership is needed for the Indian business on the offshore markets to run the operations?
Okay, let me speak about. Because this might be too many aspects, we just need to understand that building a healthy business partnership, you need to understand the both parties, regulation and this. So let us start as like an example for a good business partnership. It happened all over the years. You can see that, there was a business partnership between Toyota and Tesla back in 2003.
Yeah.
So Toyota had give Tesla an option that they can check their industry, how it's going on. Also, do you know that there's a very amazing business partnership happened between Apple and Nike? Your earbuds, which you have, it's mean that there is a good business partnership just to increase the revenues of Apple like earbuds that happened in that. Uber, you can check Uber and Spotify. There is too many. Actually, it followed the same policies. Just need to understand the both markets, how can they emerge together and develop their own strategy for the maximum benefit and revenues for like their shares.
Fantastic. Thank you. I'll go with the same question with the Kashis.
So I think building strategic partnerships can drive innovation and growth, but there are various considerations that businesses need to keep in mind. So one thing could be that you need to see that your partner aligns with your goals and values, that you both share the same long-term plan. Another would be, assessing their jurisdictions, assessing their, from the legality point of view, need to be aware of those kind of risks. Then you need to see that there is a cultural fit and, the communication wise, so that there are no misunderstandings, between the companies. You need to check their financial stability. You need to see that there's no risk of operational disruptions or, that so that you ensure continuity in your business relationship. Then you also need to check their infrastructure, their technology and logistical processes so that their capabilities meet your requirements. Another would be, how they manage risks, how they handle the disruptions, ensure that they have a robust risk management plan in place so that you don't face any challenges in future. You need to clearly outline roles, responsibilities of each company, of each firm, both the partners very clearly. There needs to be, open communication so there's no overlap, there's no gaps. You need to have joint teams that participate together, that, frequently have meetings together. You need to be aware of what your partner is doing, the cases that they're handling, all the operational wise and the legality wise. You need to adapt your business and scale as well as your partners so that you both are sharing the same goals.
Fantastic. Thank you so much. Keeping on the note, also surprising, wondering, how the future outlook going to be when you're coming to the offshore markets for Indian business overall? For Michael, please.
So, future emerging
Yes.
market trends with regards to investing. And I'll speak about two. Number one, the proliferation of artificial intelligence in the financial markets. We are at the early stages. I'll give you one example. The role of the standard typical financial advisor will be greatly diminished in the future. And this is happening already. We have robo-advisors. Your portfolio, if you invest in mutual funds, fund managers, are simply going to be computer programs, are going to be run by computer algorithms, and artificial intelligence. So the financial decisions are going to come from AI. So that's one trend. The second trend that I see happening is the continued convergence of financial companies and technology, fintech. What I see in the future, everyone in this room, I'm not sure when, but you will have the ability, you will have your phone, and you're going to get a notice from your robo-advisor, from AI, and you'll have the ability to buy a stock in New York and Tokyo any time of the day, any day of the week. And we're already heading towards a 24-hour trading environment. In the United States, there's a company called Blue Ocean Technologies. Blue Ocean has developed a technology that essentially offers 24-hour trading of the U.S. equity market. So the U.S. equity markets run from 4 a.m. pre-market, 9:30 a.m. they open, they close at 4 p.m., and then from 4 to 8 p.m. Eastern Standard Time. So it's for investors in India or let's say in Japan to have access to those times because you're sleeping and you're not awake. So this company has now developed a technology where you can now send orders any time of the day, post the 8 p.m. close or pre 4 a.m. To the U.S. equity markets. And so I think this is ultimately where we're heading, 24-hour trading globally across any market, across any type of instrument, and complete access from your mobile device.
User-friendly platform can be accessed globally from anywhere.
Any market,
Yes.
at any time,
That way,
any country.
that way there you can see the hikes or the developments happening in the volatility and the markets globally. It's well said, true actually. I'm with Tahir. That's with same.
Okay. What can be done that we need to learn about what's happening all over the past years? So let me tell you, back between 2003 up to 2009, all the banks were going just merging that the base currency was USD, dollar, and euros. There was all the kind of investment is going based in these two. And back in the great financial crisis, which happened in between 2008 2009, now it's starting of the showing that start bonds to raise in the market, starting to have some equity shares. This is start. So the global market is changing from base currency, just euro and USD, to many aspects and approaches than now. So the key word was here was digital transformation. Most of the government has been trying to do digital transformation. We learn what happened in the past years. We understand how to be adapt to the global market. I understand that there is some tightening about the global liquidity in India. So we need to understand what is our current situation during that we have tightened all the global liquidity. How can we emerge global liquidity that will match the government strategy for the local markets? It can be done. You can just add, because most of the market that have a base currency, which is USD, and you can emerge between all global markets and global liquidity.
Fantastic. It's well true because the potential of the emerging markets, or we can say the role of innovations happening with that market is tremendous. Will speed up it. But lots of the finally I come to the final question with everyone. How, or we can say that, what's the key advice to give to the Indian business people or Indian business people for offshore markets? I can start with Michael.
Again, I go back to the importance of
Especially the key points. That's what.
Again, do due diligence on who you invest with. Counterparty risk, I can't stress it enough. It's important that you know who you're sending your money to, who you're investing with. That's one. And the second point, have an effective exit strategy. Whether you're buying a stock or you're investing in a business or opening up a business in a foreign land, knowing when to get out is just as important as knowing when to get in.
Thank you. Fantastic. Cassius, please.
So I think expanding into offshore markets, it presents a wealth of opportunities, as long as you're able to navigate the complexities. So my key advice would be to make your own plan, implement certain strategies, like, conduct in-depth market research, thoroughly study the market dynamics, the consumer behavior. That is very important. Again, I can't stress enough about the regulatory landscape. You need to be aware of what the jurisdiction is, what the regulatory requirements are. You can hire local talent, you can build, strategic partners with local people, local firms, local companies, so that they can guide you with the legal matters, and they can guide you better and advise you on how to penetrate that market. You can adapt your business model according to the needs of those people living in that particular jurisdiction. And of course, technology is the main thing. Leverage technology, use softwares and tools that can, plugins that can provide a better service to the consumers.
Fantastic. Excellent. Thank you.
Okay, guys, I just want to speak you as a friend for all of you. I think after these two seminars and the too many information that you got, like when you prospect all the brokers booth here, now you have a basic understanding about the global market and the global liquidity. By the way, you can do it. You just need to dig for information, understand better about global emerging, how global market works, even for your own benefit. And I am happy to share with you, I was a telecommunication engineer. I said yesterday, for over 11 years. I know nothing about it. Once I started to shift my career to real estate investment, I got to know about the operation, how emerging in financial market it can be. And for me, like, let me ask you, say it in a good way. Watching the financial news, for me, it was like hard algorithm. I don't know what they keep about. I don't know what's and CBI. I don't know what that NFP. What does it mean? How does it will affect in my life? But when I started getting more and more in this industry, I thought, wow, now I can know. Now I am following all the news in the market. Now I know that NFP, what does it mean? Then the interest rate is going high. This might happen. Even in my life, for my family, I know how to buy gold and when to sell it. Actually, it helped me in a way. Starting later, I start digging for more information, how to understand how this market works. Believe me, this market is one of the amazing and most profitable markets that you're gonna have. Do your due diligence. You know how to choose your broker. You know more about how to handle the risk of your investment. There is too many brokers are giving webinars, free webinars. Take advantage of that. There is too many channels in the social media. Now the world becoming all YouTube and social media. Too many groups, too many videos that will help you understand about these markets. In other hand, I think that the Indian government will go for global liquidity emerging in the near future. I am 100% sure about this.
No doubt at all. Red, it was a great, amazing discussion what we had today, and thank you everyone on the panel today. And it was an excellent time. We got a lot of informations. Hope everyone is enjoyed here. If you have any questions, we are happy to answer, please.
Yes, we can take maybe one or two questions. Yes, can you please pass the mic at the back end of this hall?
We talked about the risk in a length. Let us distribute the risk into 4 parts. One is the technical risk, your financial risk, and the legal risk. I will leave the 4th for your in-house risk. We are talking about the legal and the financial risk in context to Indian market, because the offshore is not going to be accepted legally by the RBI and all other SEBI, and even SEBI is working to eradicate options trading for the smaller traders. And absence of this legal risk is not the trading platform turning into a betting platforms only. So how you as a platform providers are going to address all those things from your point of views and from the traders' point of view, all this risk?
You
basically
choose
you
who
look-
will gonna answer you.
Yes, I'm looking for someone who can, please.
Anyone can take that. I will be happy to have the answer. I'm not concerned about who is actually answering all that.
Exactly. Please, someone from your guys.
Yeah, look, the legal risk, again, it's a difficult situation here. They don't make it easy for Indian investors, Indian traders to invest abroad. It's definitely a challenge. There should be more should be done on the part of the smaller investors to give notice to the proper authorities where it's not so restrictive in terms of taxation, in terms of compliance, in terms of regulatory risks and requirements. Obviously, the more restrictive it is, people are going to find ways. The people are going to find ways to invest abroad. It's going to happen. One way or the other, whether you're a big business, small business, retail investor, it is going to happen. And I would hope that in the future, the government here in India would realize realize that they're really only hurting themselves, because what ultimately ends up happening, and this is my opinion, what ultimately ends up happening, people are finding ways to get money outside of the country, right? And legally to do it. And that money is not returning, it's not coming back to India. It's staying abroad because the taxation is too heavy, the regulations, the scrutiny, it's too heavy. So the funds are staying abroad. I'm going to give you an example in the US. In 2018, there was a tax law that was passed. It was estimated that there was over $2 trillion. US foreign corporations were holding over $2 trillion in foreign subsidiaries. And they refused to bring that back because the taxation was too much. And so in 2018, they passed a law. And the law basically brought down the tax rate equivalent to what they were holding in many foreign countries, let's say such as Ireland and whatnot. Within an immediate effect, over $400 billion was repatriated back into the United States. And not only that, but that money was spread out, the tax liability was spread out over a number of years. So all these companies had all this additional capital brought back into the country. And so, again, I hope in the future, I hope the regulations here in India become less taxing. I hope they become a little bit more accommodative. But it's certainly something that you need to consider when you're doing, when you're investing abroad. You have to consider that the repatriation of funds and the challenges associated with that.
Appreciated. Well explained. Thank you. Anyone else?
Does this answer your question, or we can follow? Okay, I can give you a small example. Consider you are a broker. We are the regulatory. It's okay. When you come, you will come with a trade license. We will ask you what is the source of fund. We will do a background check about all the history that you have in your life. Just to understand this. You should have a valid proof that your platform, your connection, your liquidity provider, we will check this. We will check each word in your website. You should have, like, we'll check your bank account, segregated, dedicated bank account for your broker. So it's not an easy part. Even sometimes you have to pay a security of fund that millions, so we make sure that this broker will not do bankruptcy. At the time that he will do bankruptcy, all the clients onboarded in this broker, that they will get back their capital investment. So it's not an easy part.
All right.
Thank
you so much.
So if we don't have much time for any further questions. But
Well,
yes, if you all have any more thoughts, I would urge you all to please join our speakers offline and take those questions. A round of applause for all our speakers.
Thank
One
you
more
so
time,
much
please.
for everyone.
Thank you so very much, Sai, for really weaving that whole conversation for us together. And would urge you all to please come together for a group picture. Well, I must say that it was not just a panel, but some multi-decular learnings on this fantastic topic and how we can really demystify the offshore market and access the global liquidity for Indian businesses. Thank you so very much for sharing those insights with us.